In this video, we're going to analyze the mid and long-term outlook for crypto. I'll explain why, after this major crypto drop, it's crucial to see clear signs of absorbed selling at the lowest point of the entire bearish swing. At the same time, we need to see an exaggerated buy reaction within the same candle, strong enough to reverse the price and restore some hope in the ecosystem. First, let's take a look at what the traditional market is showing us, starting with the S&P 500. Many of you might remember that we had been evaluating this bull trap and how the price plunged aggressively. A lot of media outlets are now spreading the idea that the main reason for this drop is the release of DeepSeek's new model, the competitor to OpenAI, that has achieved the same performance ratings at a much lower cost. The narrative being pushed is that China is rendering the U.S. multi-billion-dollar investment in AI useless. But this is something we've already discussed in recent Crypto Insight Premium live sessions, where we've shared our take on the matter. It's surprising how quickly some media outlets declare a black swan event based on a single piece of news, without any macro context or real market perspective. As you can see, claiming we're facing a true black swan event seems quite exaggerated, far from reality. To begin with, we have no certainty that DeepSeek's model will dominate the market in the next 10 years, or that the entire U.S. AI industry is doomed to fail. Anyone familiar with artificial intelligence knows that even considering such a scenario, even for a second, is not just absurd, it's ridiculous. Now, looking at the charts, we can see that after the extreme fear in the market, the S&P 500 is already recovering. That doesn't mean the story is over. The next step is to break through that structure. But at least we have a clear picture. The traditional market isn't dead, not even wounded. If you turn your attention to the Nasdaq, you'll notice that, unlike the S&P 500, its defense zone hasn't yet been reached. It seems to be lagging slightly behind. But take a closer look. The Nasdaq's defense zone is much cleaner. Unlike the S&P 500, there are no recent highs that exceed previous levels, making its structure more intact. That's why, to confirm a continuation of the bullish trend we are prioritizing, we need to see the Nasdaq break through the defense zone that the S&P 500 is currently testing. In other words, what we want from the Nasdaq is for its price to attack this zone, surpass it, and in doing so signal the possibility of continued strength in the traditional market. This is in stark contrast to what's being pushed on social media, that DeepSeek represents a black swan event. Now, if we shift our focus to the bridge between traditional markets and crypto, you'll notice that MicroStrategy is still defending its key structure. As long as this structure remains intact and unbroken, we can maintain a bullish outlook on the crypto market. This puts us at a structural extreme, reinforcing the idea that all is not lost and that a bullish bias can still be prioritized. In previous videos, we've already covered what signs would lead us to change our directional outlook. Looking at Bitcoin's 4-hour chart, we can see how price has been holding this defense zone with great precision. Institutional players are not allowing price to break through this area due to their own interests. We previously identified this compression as an accumulation process that has already broken out, followed by a retest of the breakout origin, a highly significant event. However, what truly demands our attention is the most recent section of Bitcoin's chart. We're about to give Bitcoin's chart a deep analysis, so pay close attention. Here we've identified a micro defense zone. We can tolerate this bearish move as a potential trap, as long as this defense zone continues to hold. Right now, the price is attempting to test and break through this level, making it crucial to see whether the zone is ultimately defended or not. If we check other charts, like Ethereum, we see a similar scenario. It's also attacking a market extreme, specifically a defense zone that has been in place since November 2024. The working hypothesis here is that we might be seeing the development of a bullish accumulation process which sooner or later could lead to a structural breakout pushing prices higher, not just in Ethereum, but across the crypto market. However, we have to be realistic. We are currently standing at the edge of a cliff. This is a structural market extreme, and right now it's under threat. That said, the recent volatility we've seen in the markets appears to be getting absorbed, and for now, everything seems to be holding up well. But I can explain this much better using Cardano's chart. Just like Ethereum, Cardano is also forming a key structure, a structural limit that has recently been tested with strong aggression. This aggressive move hasn't gone unnoticed, as we can observe increasing volume in this attack, along with a significant shift in the delta. This brings us to an interesting insight that we can explore further using the order flow chart. This type of visualization allows us to look inside the candles and see what really happened during this drop. And I'll tell you right now, the information we found here is highly relevant, and understanding it can give you an edge in the markets. I'll break it all down for you, but first...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Let's zoom out for some context. Take a look at this. This is Cardano, and here is the sharp drop I mentioned earlier. Pay close attention because we're specifically talking about this very move. Now, let's zoom in to see what's happening inside these candles. Look closely. The price falls dramatically, and notice that this candle has significantly higher volume compared to those on its left and right. That makes it a candle worth watching. Now, on the last and most aggressive candle, check the lower section. Do you see that? There's a key price level with a large red cluster. This indicates a massive transaction volume where the bid is dominant over the ask. The bid consists of both market sell orders, active orders, as well as stop-loss triggers from buyers. At the same time, passive buy orders are being matched with those direct sell orders, which is why we see a strong red presence here at the bottom. What this tells us is that there was clear selling intent at these lower levels, yet it failed to push the price in its favor. So we have to ask ourselves, was it retail investors behind this failed attempt? Or was it strong hands? I think you already know the answer without me having to say it. Now, take a look at this candle. There's a large cluster of buy orders. Notice the green color inside this aggressive wick and how the next candle shows the exact same thing. In other words, they absorbed a fear-driven drop and executed active buying, which was strong enough to push the price higher. This brings us to a very interesting point. Looking at the traditional chart, we see undeniable institutional presence in these price zones for Cardano. They absorbed the selling pressure and injected enough buy orders to drive the price up. This suggests that the idea of a potential bullish accumulation phase makes sense. Now, for those who are new, this doesn't mean that just because we see institutional evidence of buying in Cardano, we assume an automatic rally. If they're buying Cardano, they're also buying Bitcoin, Ethereum, and so on, not because Cardano dictates the market, but because what happens in Bitcoin will reflect in Cardano and vice versa. If institutions are taking long positions here, then prioritizing a time-based accumulation phase to be bullish makes sense. That's simply what the chart is telling us. But here's a key question. Are institutions, the so-called smart money, infallible? Do they always win? Is there some all-controlling force behind everything? Or are there multiple players competing against each other? The reality is smart money can fail, and when it does, the consequences are significant, which I'll explain now. If these buys fail, and they absolutely can, because there isn't a single entity controlling everything but rather different funds and institutions competing pieces of the pie, then we'd likely be facing a black swan event. This would point to a bearish scenario, because it would mean that the buying force at these crypto levels has been completely overwhelmed. And if they fail, who else would be left to hold the market up? Now, here's something to reflect on. First, let's be clear, this does not mean the bull run is over. Not at all. What we're analyzing here is simply a price structure, and if we add some context, take a look at what we're actually talking about. This isn't the end of the world, not even close. What we're saying is that if this level were to break because institutions lose their positioning, we could see some temporary momentum and aggressive moves to the downside. How long that could last is another question. But here's the key takeaway. This chart, this analysis actually encourages a positive outlook. Institutions have positioned themselves here. This could take time to develop before a move happens. We don't know that for sure, but they've stepped in. And that leads us to believe that, at least initially, we should maintain a bullish bias. However, here's the alert. While we remain positive for now, institutions don't always win. And we'll know that for sure if this structure is broken aggressively. If that happens, the alert is triggered and we shift from a bullish bias to the exact opposite. I hope you understand the order of priorities and the sequence of events. If you do, then you fully grasp this technical analysis. If you found this advanced analysis interesting, let me know in the comments. Also, don't forget to like the video, subscribe to the channel, and hit the notification bell so YouTube lets you know when I post new content. Best of luck with your trading and see you next time.